Hi everyone and welcome to the market outlook for the month. So the month of June was good for equities for Indian as well as US markets. So if you look at Indian markets, last month Nifty 50 large cap, they went up around 3.37%, and from a 1 year perspective the Nifty 50 index is up around 7.5%. Then mid and small and micro caps also went up between 3 to 5%, and they're also from a 1 year perspective they're up with somewhere between 4 to 6%. US Nasdaq, the tech heavy index, US market went up around 5.5%, and it's up around close to 15% in the past 1 year. The gold corrected a bit. Gold went down around close to 3%, but it's still 40% returns the gold has given last 1 year, and silver was also not far behind, where it has given on 22% in last 1 year. And last month, while the gold corrected close to 3%, silver was up around 4%. So most of the asset classes, they gave positive returns in the month of June, apart from gold. And this is despite the recent conflict and recent geopolitical crisis which went on between Iran, Israel, and but still we didn't see correction as such in equity markets. In fact, we saw positive returns. Although now that issue has been settled, there's a ceasefire. The crude oil, which remained volatile because of geopolitical tensions, gold corrected slightly, and as these tensions they eased down, and silver, however, gained because of the primarily because on the back of the strong industrial demand. We've been seeing a gap between the demand and supply for silver for the past few years, and that's keeping the silver prices upwards. Indian equities surged. That was supported by the upfronting of the rate cut by our central bank. It's close to 50 basis point was a rate cut. Expectations were largely on 25 basis points. So that really helped the markets to also. And also, our central bank has been proactively improving the liquidity in the market. So both the liquidity improvement as well as the upfronting of the rate cuts has to support the economic growth, consumption, and has also supported our markets to turn positive. Now, the other two key aspects which influence and has been influencing our markets forever is one is your investor flows. So when you say investor flows, one is domestic institutional investors and another one is foreign institutional investors. So both the parties have given strong flows into a market. They've remained buyers in the month of June, and which also indicates the continuous confidence in Indian markets, and where they see Indian markets placed quite well, where the global markets have certain concerns. Now, but at the same point, if you see the valuations of Indian equities, they are a bit stretched. As per us, the overvaluation of our Indian equity is still 10% if you look at Nifty 500 P ratio, which is around 25.34. The large cap seems to be fairly valued. The mid and small caps are relatively much more overvalued. But at the same time, one important point to note is that the recent earnings which came across, we've seen that earnings of small and mid cap companies have been higher than the I would say significantly higher than the earnings growth of the Nifty 50 companies, and that was a good data point, and where we saw these companies going at double-digit percentage rate, so which should support these higher valuations and might support the positive returns too. Now, if we talk about our outlook on the markets, we continue to stay bullish on equity from a long-term perspective. And there are a few reasons. One is that the easing of the global interest rates. We've seen rate cuts in Indian markets. We will also see rate cuts in US in the coming months. And apart from that, your flows have been really strong. Domestic flows have been really strong in terms of supported by SIPs, which is being around 27,000 crores every month. And also the weakening of US dollar will also support the flows, the FII flows towards emerging markets, and India is definitely a bright spot in that bucket. The earning expectations, if you look at those also for the first quarter of the financial year, are strong. and they're supported by the pickup in the government expenditure as well as the RBI rate cuts and liquidity support. Whereas the trade uncertainty is definitely there, where you have the tariff announcements coming in from US, and as and when the story shapes up, will definitely have its own impact on the market. So that will definitely create a bit of uncertainties. Now, if you look at equity buying, we suggest if the investors are under allocated in their equity as per their equity allocation, then one can invest into equity and add the allocations. Whereas the large cap equities are preferred due to their relatively better valuations, and where the investors have good amount of or the right amount of equity allocation in the portfolios, we can look at further corrections in the market valuations for further buying. And from global equity investment perspective, US markets are overvalued, especially with the recent rally we've seen in those markets. And but from a diversification perspective, those markets still remain a good opportunity, and additional funds can be deployed there. China also remains attractive investment opportunity, supported by the government authorities there. Gold and silver as an alternate asset class, the outlook on it remains bullish in the long term. Gold is driven by geopolitical tensions, the corrections or the falling of the US dollar, as well as the rate cuts expected there would help the gold prices. And silver also is being good story, more from a increasing demand, where there's limited supply in the market. So we remain bullish on gold and silver. And the overall investors' guidance is that while we may see volatility in the short term, but in long term we stay bullish, and any further investments into equity asset classes should be from a 5 to 7 year horizon. And from that perspective, we see good positive returns in the markets. So that was the outlook for this current month. I hope you liked it, and we really look forward to meet you soon and discuss the portfolio.